Good, good afternoon, everybody. Welcome to this webinar. We'll just wait for 2 more minutes for more participants to join, and then we will start. So just be patient for 2 more minutes. Thank you.
Hi Amit bhai.
Just we will start in another 2 minutes. Just please bear with us. Few more participants are joining. Amit ji, can we start or we wait for a minute? We just
Yeah, I think we should start because we should
yeah.
be punctual in
Yeah.
starting.
Great. Okay. Thank you, Amiji. So, welcome participant for this webinar. We know that the FEMA is also very complicated matter. Things keep on changing. You import something, you need to pay on time. You export, you need to receive on time. Not only you need to receive the money on time, but you need to complete the formalities of EBRCs, etc., IDPMS and EDPMS. Lot of challenges. So we are lucky today to have a webinar on this subject. Mr. Gaurav Vasavda, expert, he will be guiding us. Meanwhile, I request our chairman Amit Kamatji to give the little insight on this topic. We will start thereafter. Yeah. So Amit ji, over to you.
Thank you, Dr. Sant, and good afternoon to everybody. And thank you for joining this webinar. This is another webinar in our series, knowledge sharing series, which is the endeavor of Triple FAI to disseminate knowledge, information, and do capacity building. This topic is actually of immense importance, though a few of us, we give a lot of more importance to day-to-day custom clearance activities and ignore this. But in freight forwarding, where you are making payment of freight on behalf of your exporter or doing a DDP shipments and all that, these regulations have immense importance uh, with respect to exporters also, and as custom brokers and freight forwarders, it also affects us. So we have chosen this topic for today's webinar, and we have with us Mr. Gaurav Vasavda, who is a forex and trade expert and banker. He's a faculty of FEDI and IIBF. And what this webinar will give you, it will give you insights on the recent change in RBI regulations for exporters. What are the changes that will be effective from 1st October 2026? FEMA and RBI directives, what are the responsibilities and expectations, and how custom brokers will get affected for non-compliance by your exporters. So I think it's a very important topic, and thank you once again for attending and participating in this webinar. Uh, your participation is the only encouragement for us, and we will continue to have many more such webinar on important topics which will affect the custom broker, freight forwarding, and the logistics fraternity. Having said that, I would hand it over back to Dr. Pramod Sant. Thank you, Dr. Sant, and over to you.
Yeah, thank you, Amit ji, for this the insight and what is the need of this knowing these new changes into I think. We also have Mr. Shankar Shinde, past chairman and advisor to Triple FI. So I will request Shankar ji to have a few words on this topic.
Uh, Thank you, Dr. Sant. Sorry, I had to travel, and but with the emergency, I said I'll just take an opportunity to meet. First of all, let me thanks Chairman AAFA, Mr. Amit Kamath, for organizing this very important webinar, which is in need of an hour. Because today, if we see the challenges in the logistics sector, we always say logistics as a backbone of the economy. And when we say backbone as an economy, it has to be a supportive system because in facilitating the seamless movement across the borders, enabling the supply chain with resilience, we cannot be in isolation unless we have all the supporting system to take taken care. I think so. It is very foremost thing that this is supported with the forex exchange, which becomes a very important aspect. And as a global manufacturing export hub for India, I think so we should look it from the perspective how we can support the exporters and importers with regard to infrastructure, evolving infrastructure under the initiatives like PM Gati Shakti Master Plan and National Logistics Policy, which is coming up regulating the ecosystem, and also the foreign exchange compliance under the FEMA. When we talk about FEMA, it is a practical challenge in the logistics industry, which will be addressed today by Mr. Gauravji. It is really a great thing, and we have an expert from this industry on the FEMA. Now, FEMA was designed to regulate the cross-border transaction and the main external sector stability, but the logistics sector providers and the freight forwarders, we call it as a custom brokers, NVOCs or multimodal operators. The nature of business is inherently global and dynamic and documentation intensive. Now, this creates a friction when regulatory frameworks do not fully align with the operational realities. I think so. The some of the key challenges which will be surely addressed today, which can be from the point of complexity in the inward and the outward remittance for freight and allied services, then the treatment of the third party payments and the reimbursements, then delay in export realization and the impact of compliance, then documentation mismatches between the shipping practices. So there is a lot of ambiguity and in the classification of service under the current accounting transaction. So today there is a classifications of heading which has been provided under the FEMA, which needs to be rightly updated and identified and classified while we are doing the remittance. Otherwise, it will also carry a very huge compliance issue. I think so. It is also one of the most important thing which needs to be addressed. Recently, under the chairmanship of Mr. Amit Ji, we were called by RBI also to address as to what are the issues with regard to remittances, because today they are not even aligned with the Incoterms. When we talk about the Incoterms, also like FOB, C&F, CIF, or DDP or DDU, like duty payments are also one of the remittance which has to happen. Now we do it under the reimbursement, but as per the FEMA or as per the regulation, if you see the even the you cannot make any foreign exchange transaction to any non-resident Indian. So what happens? The duty we are collecting over here, maybe it in Indian rupees and converting over here. But on the other side, when we talk about the foreign exchange differential rates to be paid, the shipping lines and freight forwarders or the NBOCC say, okay, you pay in US dollar. Now, when it comes to a reimbursement, you cannot pay from one non-resident to another non-resident in forex, but whereas the exporters insist to collect in forex because of the markup exchange rate. Now, this will again become a compliant issue. So, we also explained this to RBI, where they are looking for this, how it can be enabled in the system. So, considering all these issues, I think so it is a very important aspect. We may have some point collection from this seminar as to what are the things really our trade is facing on this aspect. Because today in the global market today, if you see a lot of reworking containers are happening, and this has got no relationship with regard to India as a transshipment hub to have on the documentation. Now, under this also, there is no relationship to make the transaction when it comes to the international containers reworking. So even this type of issues needs to be addressed by under the FEMA. I think so. There is a lot of clarity. Still, we can provide some of the important things, enhancing clarity in the FEMA, strengthening the coordination between the regulatory banks and the industry, leveraging digitalization of the compliance efficiency, and most importantly, is that creating a facilitated environment that balances the control with the growth. So let us use this platform to share insights and highlight practical issues and collectively work towards a more streamlined, transparent, and globally aligned regulatory ecosystem, which will surely help our industry in the longer go. Because going with something which is not clear can become a liability in future again under the FEMA, which may be a troublesome for the any of the startups, MSMEs, and we do not have that level of support system which can support this type of regulations in the court of laws also, and which has a huge expenditure. So let us work, and I think so Mr. Gauravji is here who can really give insights on these matters of the trade challenge facing and the question and answer during which will be handled by yourself, Dr. Pramodji, and also Dr. Niravji is with us and Tej is there. As you said, this will be a very important and useful webinar. Thanks a lot.
Thank you, Shankarji, for your really the detail and the explaining the importance for custom brokers and freight forwarders. I also welcome Dr. Nirav Thakkar, Honorary Treasurer for Triple FI. We have Mr. Mark Fernandez, Advisor. We have Anil Kumarji and Rajesh Vermaji, Office Bearer, and Tej Contractor, who is the President of Indian Institute of Freight Forwarder. So I have a important task of introducing the Gaurang Vasudeva. So Gaurangji is a banker, veteran banker for more than 40 years of experience. He is also the faculty at various institutions, including the Foreign Exchange Dealer Association of India, FEDI, Indian Institute of Banking and Finance, Ahmedabad Management Association, Exim Institution, Global Exim, then CII, ASOCAM, and FIO. He regularly, and he is also very known because he has already conducted the 3 sessions for Triple FI last year. So he's a known face and veteran in this area. So we really look forward for his insights. So I request participants to put their questions into Q&A box, which we will take up after the Mr. Gaurang's presentation. And over to you, Gaurangji.
Thank you, Dr. Sant, Dr. Mr. Shinde and Anil Kamalji for putting the right perspective in place. I must thank Dr. Sant and Triple FI for this opportunity to interact once again with the members of Triple FI. Now, very rightly said that there are complications in FEMA, and all those who are maybe when we talk of 360-degree of logistics, I think FEMA would also come there. And for this, I think this is the opportune time that we are going to have a major changes in the guidelines relating to exports and imports. What we have covered is all the guidelines related to exports, covered existing guidelines and what is going to change and how it will impact us and what all we should do. I'll just start my presentation and from there we go.
Yeah,
The
it's
screen is visible, sir?
Yeah, it's visible.
So recent changes in RBI regulations for exporters. A long list of agenda items, but without going to that, let us first see there is a lot of maybe newspaper reports, hue and cry on what 23R is. So currently what regulation we have is FEMA 23 and R is for revised. So some of the earlier other FEMA regulations have been changed by RBI in between relating to inflow and outflow also. But here 23R has a specific place what it is a transformation of law or transformation of regulation. It was announced on 13th of January 26. The regulation has been announced there, but it says that these guidelines will be effective 1st October 26. So we have time to prepare for that. That is, I think this is my first seminar on FEMA 23R. Thanks to Dr. Sun that he told me that how we can go. And still, I have been finding out, talking to banks, talking to FEDI, talking to various officials, nothing much has been done. It is all what is being discussed. So I think we are one of the icebreakers that we will be discussing the guidelines and changes on that. Now, earlier FEMA 23 was only relating to exports. Now there is a composite FEMA where exports, imports, and merchanting trade transactions, everything is being covered. So this is replacing 23, but and there was no regulation for imports and MTT earlier. We have been fighting with RBI that if there is no regulation, that how do you go for compounding, or how do you go for regulation or regularizing the transaction? So that has not happened. But thankfully, under 23R, it is a subsumed or a combined document where export, import, and merchanting trade transactions are there. And there is an existing master direction on export of goods and services and import of goods and services. So that is now valid up to 30th of September only. From 1st of October, the revised guidelines on FEMA 23 are a very brief circular has been issued, which will take over. So we have from today till 30th of September to understand, to rectify, to close the bills. Everything is there with us now to do under the existing guidelines. Now, this particularly has increased the role of the bank. Current regulation, current master direction, AD would say, this is not in our power, we'll go to RBI. But now the things have changed. What has changed? There is a fundamental shift. The rule-based guidelines, where all the rules were mentioned there, instead of that, it is a principle-based. And how it will work. So thresholds have been removed, timelines largely have been removed, and the addendum conditions have been removed. There are no conditions, nothing, or many places you will see when we go through this presentation, we will see that what all things change. Now, the thrust is everything on the principle base has been moved from RBI to banks informed judgment for each transaction. Bank will have to decide whether I have to do this transaction or not, whether it fits my policy or not. Everything will be there. Moves from RBI oversight to bank supervision and ownership. Now, what was there? Even what banks were doing, they were doing within the RBI framework. Very little leeway was there, more particularly in imports. But in exports also, they used to say, sir, this is not format. And very rightly said, third-party payments or remittances, everything. Some of the other issues were there. Now it has moved to bank supervision and ownership also. So banks will own the transaction, bank will own the customer. It has to be in that manner. And the framework is simplified, replacing the fragmented framework. So maybe multiple circulars, multiple guidelines, maybe no regulation for import and MTT, only one regulation for exports. And then if you have some very serious issue where you go to RBI for compounding, even that was not possible. Now, for this all, RBI has said that banks will have their own policy approved by their board of directors, and within that policy, everything, including the SOP. So, towards the end of this session, I will say that what banks are required under these revised guidelines, and then we will all have to see what banks are offering us, and based on that, we'll have to maybe submit the documents, prepare the documents, comply with the guidelines, and everything. When we compare the existing guidelines on FEMA 99 and the changes which have been given in FEMA 23R, couple of slides I have overridden that and see what exactly FEMA is. FEMA is what? Taking out of goods out of India or provision of services out of India, where it says export means you are supplying goods out of India, you are supplying services out of India to a person resident outside India. Now this, in my view, the word commercial is not there. I will treat it as an export when it is a commercial shipment. And when it is a commercial shipment, it must be paid to inward remittance. And I've been saying, people say, sir, mera export hai, bhej diya. Why do you want me to bring the money? I may not bring in, but no. When we are exporting some goods out of the country or providing services, we are exporting the wealth of the nation. And for that matter, it is being monitored. Now, what FEMA 23 says, or even the earlier FEMA 23 or FEMA 23R says, it must be paid or accounted for. If you are not able to bring in the money, there are provisions there but you have to close that shipping bill. You have to account for to your bank and even DGFT. When now the shipping bills are there in DGFT, you have to close that by putting appropriate remarks. Every exporter shall furnish to Reserve Bank of India or any other authority. Now, this authority is what? Our authority was customs for submission of shipping bill, declaring the amount, value, declarations, etc., correct material information, etc. Our customs. Now, FEMA 23R has moved beyond that. What they have said, they have defined the specified authority. Earlier, they said we will not define who is the specified authority. They let the government agencies say. But now, what they have said, Commissioner of Customs in case of DTA and Development Commissioner in case of SEZ for goods. Now, only two authorities are there which can certify the export of goods. More than that, for services other than software, it has said authorized dealer in DTA and Development Commissioner in SEZ for services other than software. So till in the current regulations, authorized dealer has never been taken as a specified authority. Now, authorized dealer has been made a specified authority for services. An authorized dealer or software technology park in DTA and Development Commissioner in SEZ for software. So software also, what they have said, authorized dealer and STPI both are there. Plus the SEZ, if it is in, if the software company is in SEZ. The great challenge here is that for the purpose of regulation, services will also include software. So now whether software, that Softex forms is going to continue or it is not going to continue, and only that single declaration form is there that is to be filed, that is yet to be clarified, because people have been talking that Softex cannot move out, and how banks are going to approve the Softex, that is another question now. So whenever you are sending outward remittances relating to non-exports, maybe your commissions are going out, everything is there, the authorized dealer will be certifying agency or somebody supplying export of services. There also a declaration has to be given to authorized dealer. An exporter of goods shall furnish to a specified authority a declaration in form EDF. Now, what EDF is? Export declaration form is one form which is mandatory for all types of export, whether services, goods, or Softex. So in this particular guideline, Softex has been removed and it has been taken over by EDF, whoever is certifying it. Now, when I'm submitting my shipping bill to customs, there is no need to submit separate EDF to bank or any other authority. So what does it say? EDF will be deemed to have been submitted when you are exporting goods. So if the declarations relating to EDF are already subsumed in the shipping bill. But in case of non-EDI, wherever non-EDI is there, so EDI, what will happen? EDI, when you submit a shipping bill, it will flow to EDPMS and it will flow to DGFT through your ECCS or through your ICE gate. But in case of non-EDI ports, and I'm not really aware how many non-EDI ports are still pending there, except for our postal exports, because that data is still not flowing correctly into the system or from the entire country. But largely all our what we call seaport, airport, our SEZ units now they are under the ambit of IceGate. Even our inland container depots or land borders, everything has come under EDI. Maybe some here or there is something is pending. Therefore, that non-EDI document is to be submitted to an authorized dealer. An exporter of services shall furnish the specified authority declaration in form EDF within 30 days from the within 30 days from the end of the month of each invoice. And if there are more than one recipient, then a consolidated single every month submission can be made. Other than software services, EDF on or before the date of now, this is mandatory. We have till now for export of services, we have not been submitting any document to the bank. Rather, only one invoice is given to the bank. But now, before receipt of the money, this has to be submitted. So, if whichever is there, if it is 30 beyond 30 days, then in 30 days. Otherwise, before receipt. AD may at the request. Now, this is the timeline. The timeline for submission of export document for goods has been removed, which is there for 21 days as of now. We will see when we go to the master directions. AD may, on the request of the exporter citing reasons for the delay, may allow extension in submission of the document. Now, this satisfying itself of the reasonableness of the request is everywhere in the directions, because now everything is on the This submission of required information is already prescribed in FEMA 23R. Now, this is the small direct declaration shipping bill. I we undertake to abide by the provisions of the FEMA as amended from time to time, including relation repetition of foreign duty. This has been replaced by a declaration in Form EDF, and I think going forward, this entire declaration will come in the shipping bill also. So it will become from 1st of October. The same things are there. But it also has one line. I also undertake to submit the documents pertaining to exports declared in this form to the authorized dealer named about as may be required under the Act. This is the additional thing which I think which has been given there. Uh, FEMA 23R prescribes about the timeline for realization. Now, timeline for realization has been amended maybe from 14th November also, but from 1st October it will more you will find a more change in that timeline. The full export value or the reduced value. Whatever if you are getting a reduced value, no problem. You account for it within that timeline. 15 months from the date of shipment in case of goods, except which have gone to warehouses. Now, warehouses, we have separate guidelines. What is the current guidelines? Prior to November 14, it was 9 months. For warehouse, it was 15 months. 15 months from what date? From the date of shipment. Now they've changed it. What changes? 15 months from the date of shipment in case of goods being sold directly without touching your warehouse. And 15 months from the date of goods from the sale of goods from the warehouse. Because warehouse you ship in January, your goods are sold in June, or your goods are sold in maybe next December, then how much time you get? Now they say 15 months after selling the goods to your ultimate buyer from your warehouse. So this is a one change which has been made. 15 months from the date of sale, as per the agreement. Now, in other cases, in case of project, there are separate agreements, maybe more than 15 months also could be there. So that is to be taken care in that manner. One change which is very important, and where when we talk of internationalization of rupee and pushing maybe the rupee as a currency for invoicing of exports also, there it says goods and services invoiced and settled in Indian rupees and or settled in Indian rupees. The period of relation and repatriation of full export value shall be 18 months from the date of shipment in case of goods, except goods from the date of shipment in case of goods other than those shipped to warehouse, and from the date of invoice where the goods have been sold to through your warehouses. So this is a difference. Now we have 15 months and 15 months from the date of shipment, 15 months from the date of sale for warehouse, and 18 months in case of rupee invoice. AD may extend. Now, this extension is again, no timeline has been given, but beyond 15 months, beyond 18 months, if it is going there, you must go and get this extended. Satisfactory reasons supporting documents must be given to the banks. So now this is one area where banks will come out with their own policies, how much time they are. Now, currently, what is being done? 6 months at a time. And AD shall put in place systems and processes to monitor and follow up with the exporter to realize the export. Now they have got EDPMS data. So from there, they have to put in place how auto mailers will go, how much reminders will go, what will be the threshold up to which they will not follow up or they will follow up mildly, etc. So in our previous sessions, we have talked about what are the directions on export of goods in the current scenario. So what I have done is overwritten those guidelines and then so it becomes a comparative that what has changed and what has not changed. Submission of export bills within 21 days. So it has now been moved out. What it has been said, EDF deemed submission through the shipping bill, monitor submission of EDF or documents through entries in EDPMS, and delay can be extended by evening based on reasonable. Only 3 lines I was able to find out. This 21 days have gone now. So maybe banks may say that if you have shipped the goods and you must submit the documents in 7 days, or you must submit the document within a reasonable time, which is 15 days for us. Why do you want 21 days to submit the document? So maybe banks may give this, or banks may come out with a policy which says, sir, with some certain top class clients, SEZ units, status holders, we will give 30 days, no problem. You give in 30 days. But for non-SEZ, DTA, small MSMEs, etc., we will keep only 15 days or 21 days as is. For export of software or services, 30 days we have seen. If it is a monthly, one or more recipients are there, you can always file a single EDF for all these to be submitted to the bank. Dispatch of goods and dispatch of documents. Now, two things which we have been discussing, that dispatch of documents directly to the overseas buyer is not permitted to everyone. If you want to dispatch the original document directly to the overseas buyer, then only SEZ unit status holders, or if you have received 100% advance payment, or if there is a condition in LC, only these people are allowed to send the original documents to the buyer, and they can submit a copy to the bank within the given timeline. But in all others must submit the documents to the bank, and through them they can request them to send the documents either to the buyer or buyer's bank. So, and if it has been sent directly, then AD may regularize. Regularize is something, some error has been made and needs to. So now there is no specific provision relating to that. The idea is that why there has to be, now largely the shipments to buyers is being made directly. If you do a direct shipment, why do you want the AD bank in India to handle the documents? Because it will take time. Now there are grievances in the market. People say that we give the document to the bank, and bank takes 4 days to dispatch the documents or 3 days to dispatch the documents. By the time our goods have reached there, we start incurring damage. So now this has been left to banks, no specific provision. So this is ideally deleted from the guidelines, but banks can come out with their own version in this. The regularization itself had certain conditions. So now, if the regulation guidelines are not there, then the regulation conditions have also gone up. AD bank shall enter, now what actually regulation or the direct dispatch will be there? Shall enter the details of EDF as received from the non-ADI port in EDPMS within 5 working days. Now what is there? Wherever you receive the documents within 5 working days, you should upload in EDPMS. Shall enter details of EDF of service within 5 working days from the receipt of EDF from the exporter, and shall monitor these till it is closed in EDPMS writing. So the guideline has moved now. Even if you are sending the document directly to the buyer, most likely the banks will come up with the idea that there is no need to submit the documents to the bank, but you have to submit the document as per the other guidelines where it is said 21 days or 30 days, etc. Mark of the entry in EDPMs after ensuring, so till it is paid or till it is closed, those entries the bank has to follow it up till it is marked off in the EDPMS, and banks may, on the request of exporter, close the entries relating to export advance transition in EDPMS where no export has made. Now, earlier the export advance, either you have to refund, or if it is not to be refunded and it is to be exported. Now, if when you refund, the 12 months period was there. Beyond 12 months, we had to go to RBI. That period was increased from 12 months to 3 years, or as per contract from 14th of November 2025. But ideally, nobody gives advance for 3 years or 5 years. If it is a long-term advance, if it is there, a long-term contract. But I think somebody to supply chemicals or pharma or any other regular item or plastics or maybe steel items, etc., furniture, nobody will say that you supply me in 28, 29 and I will give you advance now. The market is not that. It is the buyer's market. It's not a supplier, the seller's market. But what has happened now, or if it was to be absorbed, cancellation of contract, I have already made expenses, the condition says that I have to absorb it, I had to go to RBI for approval. Now there is a drastic change which says in case of export advance, if export shipment has not been made and the bank is satisfied with the reasons that the refund is not being made or refund is to be made beyond delayed 12 months, 15 months, 3 years, etc., then banks may close this transition EDPMS on their own within their own guidelines, satisfying to the genuineness of the reasons cited. So it will all depend now who is the customer and what are the documents available and whether the bank is satisfied. Third party was permitted subject to certain conditions, but now this condition has been overridden. What does it say? So, as of now, in the inaugural talk also, I think Amit sir and Shankar sir said that there are issues in third-party payments, this side or that side. Now here it is very clearly mentioned that AD may permit third party, other than the parties undertaking export or import, receipts and payments for export and import transactions provided the AD is certified about the bona fides of the transaction. Now we have several cases where I've been handling one case where they say, sir, the overseas party has said, sir, my account is frozen with the bank because of certain other issues. So you remit to my sister associate concern. Now whether to remit or not to remit, they are ready to give the documents. Or maybe the firm is closed and after 3 years I am required to remit the money. Or maybe in between I have sent the advance to A, but the goods have been received to B. I have received export advance from A and shipment is to go to B. All those complications were there. Now the supporting documents will have to satisfy the bank and bank will decide on the bona fide. So maybe banks may come up for status holder, for SEZ units will be more relaxed. For others, we may insist on certain type of documents. Now, change of buyer consignee, no specific provision. So I presume that earlier this was there. If the goods have been shipped and subsequently the buyer backs out, I can always move it to some other country, some other buyer in the same country. I presume this is left to banks now. Banks will have to decide on it. Similarly, remittance for agency commission, etc., declaration of the shipping bill is still there, but now the provision has been removed from that particular direction, so it is left to the banks. But the banks will insist that this should be declared in the shipping bill. So I think when you get instructions from your exporter, you can always cross-check whether any commission is there in this transaction which needs to be remitted subsequently so that that can be appropriately declared in the shipping bill while filing. Now, this is the current regulation relating to realization and repatriation. From 14th November, it has been made to 15 months, and 15 months is there for the warehouse. And for follow-up extension, documents are required. So, what is the change now? FEMA 23R says full export value to be realized, including by way of set-off. This provision was not there, and there was sometimes some confusion even with the banks, where and the exporters also, where exporters, even when they go for set-off, they were not able to get the full value BRC. So even now they very clearly mentioned that even if it is set-off, you are not making payment or you are not receiving payments against export by when you are setting it off against the import payment. It has to be treated as good as a payment made and payment received. So when you are closing the shipping bill, it has to be treated as a payment through set off, and that shipping bill can be closed. 15 months from the date of shipment in case of goods and 15 months from the sale of goods from warehouse. So this provision is changed now. And also in case of goods and services invoiced in Indian rupee, where payment it is invoiced or received in rupees, 18 months. So I presume this Nepal, Bhutan will all become 18 months instead of 15 months. And AD can extend it. So the extension provision is there. So even if it is not received in 15 months, you can always get it extended with the AD, 15 months to maybe 21 months and 21 to 27, etc. The extension time period was given earlier as 6 months at a time with certain conditionality. Now these conditions have been removed. What does it say? AD may, on the request of exporter citing the so within the policy which will be released by each of the bank, they will prescribe what conditions, what documents I will ask, and up to what time I will extend. Whether I will extend 6 months every time, or I will extend 3 months every time, or 1 year every time. What will be the requirement after maybe 15 plus 6, 21, or maybe after 3 years, if somebody comes and extends, then what will happen? What all supporting documents I require, that will be mentioned or specified by the bank only. RBI has removed all the conditions relating to that. We had two provisions, one relating to invoice reduction and discount. So up to 25% of each invoice reduction can be allowed now for each invoice, subject to certain conditions. Now this has been changed, and one single reduction in export relation, FEMA 23R Regulation 6 has been given. What does it say? AD may, on the request of exporter citing reasons for under realization or non realization. Now, this has taken over the other guideline relating to write-off also. Allow reduction in relation of export value provided AD is satisfied about the reasons cited. So earlier guideline had list of reasons, what needs to be done, up to what amount can be done, what percentage can be done. Everything has been removed, and one general liner that AD can do it under relation or non-relation, provided they are satisfied with the reasons cited. Also, very recently, I think in January, RBI came up with a guideline, sorry, 1st of October 2025, where the small value reconciliation related issues were discussed. Now, prior to 1st October till 30th September, small value export was $1,000. Now, this was extended to 10 lakh rupees both for goods, both for exports and imports also. So, for 10 lakh rupees, they say that AD can close these shipping bills based on the declaration from the exporter. Now, this circular, if somebody goes and sees, the title says based on the reconciliation issue. And reconciliation means that I should have two things in hand. One is a shipping bill in the system, and another is an IRM created. So I can create an IRM as in bank can create an IRM provided an exporter shows to him that this is the money I have received. Don't look at it who has sent or who has not sent. It is a foreign inflow, and based on that you can close it. So no percentage restrictions, no conditions attached, documents not specified. It will all be as per the banks. So the document, conditions, percentage, everything will now be dictated by the bank's policy. We also had this provision of write-off, where non-status holders were allowed 5%, status holders 10%, and banks further 10%. Export proceeds realized during the previous calendar year. And certain conditions, everything was there. Now this has been deleted. And this has been covered under relation and non-relation. Non-relation is what? Write-off. I want to write off, or I've received only 50% balance, I want to write off. So everything has been subsumed there. So again, I will read out what does it say under relation or non-relation. Reduction in relation of export value to the satisfaction of AD Bank. And here also, if the reduction or realization is up to 10 lakh rupees, bank should not ask for detailed documents for follow-up, etc. Now, this is largely targeted to our e-commerce segment. There have been ample instances. In 1 month, somebody has made exports for 100 shipments, total value is 1 lakh, or even not that, maybe $10,000. Now, against this, 100 shipments of $10,000, against that, they have received 98 payments for maybe instead of $10,000, they received $9,400. Now, bank would ask us, as per the current directive or prior to this simplified direction, bank would ask us, मेरे को map करके दीजिए कौन सा export का payment, कौन सा shipment है. When you work with PayPal, Payoneer, Skydoll, those things, there are settlement periods. Every 15 days you will get money, every 7 days you will get money. Now, how to map it? And they will deduct their own charges, and those charges can be up to 10%, 8%, something like that every transaction. Then how to do it? If you are storing goods with maybe Amazon, FBA, their charges and advertising through them, sometimes you receive only 60-70% of the money. Then how do you map? And 70% received, bank will not say because 25% condition is there. And you do not have the requisite documents. You cannot refund the duty drawback, etc., because that is not there at all. So how do you prove it? So this has been simplified that even the reduction in export relation or write-off up to 10 lakh rupees can be based on declaration, not much of inquiry has to be made. Now there are two guidelines currently for set-off, which is available to DTA units, and net-off, which is available to SCJ units. The current requirement of same calendar year is there for set-off guidelines, and net-off, there is a balance sheet date guideline. Otherwise, for import against export, you can set it off. So if I am importing, say, maybe $80,000 worth of goods from ABC in Dubai, I am exporting certain other products or same products or finished products, etc., to for $1 lakh. There is no need to change streams, 80,000 sent, 1 lakh brought in, because it will have an impact of $360,000 of conversion. I will convert my rupee into dollar 80,000, and the other guy will convert $80,000 into dirham, and then again convert $1 lakh equivalent from dirham, and I will again convert $1 lakh from dollar to rupee. So to remove that impact, they have said you only receive $20,000 and 80,000 can be set off or net off as per the provision. Now, this has been, there is the provision relating to net off has been removed. Only one direction is there in the new guideline, FEMA Regulation 7, which says set off of export receivable against import. That period of same calendar year or maybe the balance sheet date, etc., that also has been removed. What does it say? May allow set off of export receivables against import payables from to the same overseas buyer or supplier. The extension of this, though this we understand in the previous guideline also, but the extension of this, what does it say? With their overseas group or associate companies. If I am able to prove ABC Dubai has an associate ABC Bangkok or XYZ Dubai, I may allow it. I will have to prove that these are associates. The period of settlement, what is it? Within the stipulated period for relation. What is the stipulated period for relation? For exports, it is 15 months. For imports, it is different, 6 months. So if the settlement is happening within the given period in the direction, then I can do it, or I can also ask the bank to extend that guideline. I have imported goods for $80,000 in 6 months period. Sorry, in the month of January, and in 6 months that set off is not happening, and I don't want to send the money. I can always ask the bank to extend the period from 6 months to 12 months and then do it, because export I can do it anytime after that. Or I have already sent the export, instead of getting the money, I want to get the goods. I can always ask the bank to extend beyond 15 months also, because I am expecting that he will send me goods after 24 months. Time period, FEMA 23R Regulation 5 also says including by way of set off. So when I want to close the shipping bill or bill of entry, it will also be treated as a payment stream if I set off those shipping bills. No separate provision for net off. So now everything is single. Earlier confusion was there. A company which had a unit in DTA, a company in they were exporting from domestic tariff area also, and they were also exporting from SEZ. Now for those two units, same IC, different guidelines were applicable. For set off, SEZ could do anything, DTA could not. So here everything has been brought into under one umbrella. Now, this is something which has been brought in the circular or guidelines right now. Merchanting trade guidelines earlier were a part of our import circular. Currently, it is a part of our import circular. Now, in this, the guidelines are different and they are brought into import circular because they are to be treated with more seriousness. Why? Because we do not have a shipping bill or we do not have a bill of entry when the merchants in India do the merchanting transaction. And it means that maybe importing from China and supplying to Bangladesh, supplying to Dubai, where the goods are not coming to India, only the documents are routed to the Indian merchant. So merchanting trade transaction is to be done in accordance to the foreign trade policy. Now, till very recently, or maybe till the policy of 2023, merchanting trade did not have any mention in the foreign trade policy. Only in 2023 policy, foreign trade policy had this particular para there. Also, RBI said whatever is allowed to be permitted into India, imported to be India and exported out of India, only those goods are allowed to be handled under merchanting. So the Indian trader was not allowed to do anything which was restricted or prohibited in that manner. So I cannot do a merchanting trade on anything which is prohibited to be imported into India. Otherwise, goods, when it is not coming into India, then why we are concerned about it? Everything is happening outside. Dubai is importing, China is exporting, their policy permits. We are only handling documents, so why do you restrict? So then they relaxed it. What did they say? Specific items under comment, they will not be allowed, otherwise you can do it. So now even the prohibited goods or restricted goods are permitted under merchanting trade. The period for settlement. Currently, what does it say? If you receive export payment first, you can make the import payment anytime up to 9 months. because 9 months is the total period for closure. And if you are making import payment first, then you should receive the export payment within the 6 month period. So the word used currently is the outlay of foreign exchange. Now this has been removed. What does it say? It says the period between outward remittance and inward remittance or vice versa, both sides, it should not be more than 6 months. So if I have received import payment first, I should make export payment within 6 months. If I have received the export payment first, it should be paid within the import payment should be made within 6 months. Also, there is a provision that if there is a delay in remittance, this can be earlier there was no provision. If you delay in remittance, you have to go to RBI for approval, or you cannot go. RBI will say you get the money and then come for approval. So that was not possible, and very difficult cases have been there in the which have been handled by for the merchants and which are there in the market still pending with RBI or with banks. So what does it say? AD can allow extension of time. So suppose I have received export payment, but the Chinese supplier is not ready with the goods, and I have said that once you are ready with the goods, then only I will make the payment to you. And within 6 months, those goods are not ready. If I can prove this to bank, provide the supporting documents, he says, sir, I will be shipping after 3 months. So 6 plus 3, 9. I can go to the bank and say, sir, you extend this period from 6 to 9 months. I will make the period in the month of after 3 months only. Outward remittances are sent only to the overseas seller and inward remittances are received only from the overseas buyer. Now, this is very clear. Third party payments are not allowed. Third party shipments currently are allowed. But what does it say further? AD Bank, on the request of the customer citing reasons, allow receipt from and payment to any third party if AD is satisfied about the reasons submitted in the document. So now again the ball has come into the bank's arena. Merchant in trade transaction follow-up is again a tricky item for banks. And larger banks have either they are maintaining their own uh, manual registers or electronic registers or own software through which they are monitoring the merchant in trade transaction. So, and it is being reported to RBI every 6 months what are the delinquencies, what are the defaults, etc. by banks, maybe June and December every year. So what the RBI has brought in the new guideline that from 1st of October, all entries relating to merchanting trade, the inflow and outflow of funds, or the documents, if the documents have been received first, maybe for collection of import or collection of export documents, then everything will be controlled through EDPMS and IT. Credit or debit the account of its customer for any cross-border transaction related to MTT after having satisfied with the genuineness of the same and shall simultaneously close or update the respective entry in EDPMS writing. So the monitoring has been now shifted from manual or individual software by the banks of the banks to EDPMS, IDPMS. So RBI will also be able to see. Monitor and follow up with the person undertaking merchant trading to ensure both legs of the transaction are completed within the period and manner as specified in this regulation. So what is the period specified? Export payment should be received in 15 months. So my period for export relation is now 15 months here also. MTT now becomes a part of EDPMS, IDPMS for monitoring purposes. So many of our large corporates, middle corporates, or maybe even MSMEs are engaged into merchant trade transactions while the goods are not touching our port and customs formalities are not there largely, but and the shipping bill and bill of entries are not there, but still everybody is impacted by that. But those goods where the goods are parked in FTWZ or they are brought into SEZ for transformation or value addition. For them, we get the bill of entry warehouse bill of entry issued, and from there itself it goes out. A shipping bill is also issued. They will get impacted here. So maybe wherever the merchant trade related transaction is there, where the goods are being parked into FTWZ or SEZ, they will also be impacting our working manner of receipt of payment. Now, ultimately, the government wants that you should bring the money. So we have FEMA 23R, which specifies that the manner of payment of receipt will be governed by the FEMA regulations on manner of receipt and payment. which is FEMA regulation, FEMA R. AD shall make a credit to the account of the exporter for the receipt only after satisfied itself of the genuineness of the transaction and shall simultaneously close or update the respective entry in EDPMS. So I have two things now: genuineness of the transaction. So I'll ask for documents, and closure or creation of an entry in the EDPMS. So if it is a shipping bill is already there, I can close it, or if it is not there, then I have to create an entry in an IRM. For 10 lakh rupees creation of IRM or closure of shipping bill in EDPMS is against given on the basis of the declaration. Now, along with the declaration, we must give to the bank the proof of payment. What is the proof? I can show the statement, sir, on 17th of April, I have received this money. Now this is reflecting this. Say it is 4 lakh rupees is reflecting. This 4 lakh is for my shipping bill, which is of 4 lakh 10,000 rupees. You can close it. So bank will create an IRM for 4 lakh rupees and close that. So these are what 14 hours say. I have summarized it here. Money can be received through Nostro account or Nostro account in foreign currency or in rupee. If the goods are being sold to non-residents, then the money can be received from NRE account, not from NRO account. SNRR account in case of large multinationals which are maintaining accounts here. Credit card, debit card, prepaid card issued abroad. Foreign currency notes, traveler checks, either when the exporter goes out or when the maybe buyer comes to India. But these notes and checks should be submitted only to the banks, not to the money changer. Exchange houses, UAE Exchange, Al Dirham Exchange, all those exchange houses are there in Middle East. Some of them are in Bangladesh, some of them are in Sri Lanka, etc. Up to 15 lakh rupees. Then Nepal, Bhutan, IRR settlement that continues because that is a part of FEMA 14R. Iran, currently we have an arrangement with UCO Bank for rupee settlement. Pakistan is no trade as of now, so I should have marked it in red. Bangladesh, Maldives, Myanmar, and Sri Lanka. There is an Asian clearing union. So ASU union, there is an ASU dollar account which is a routing account. The dollar will come into US dollar account, our Nostro account only, but the routing account has to be ASU. But RBI has also permitted banks from Bangladesh, Maldives, Myanmar, and Sri Lanka to open rupee accounts here for rupee settlement. So we have also have an SRB account from banks from these countries. Then OPGSP, PayPal Payoneer up to 25 lakhs, and SRBA was introduced in 2025 to increase the settlement and reduce the dependence, increase the settlement in rupee and reduce the dependence on foreign currency or the hard currency. So now we have got 35 banks from 35 countries, more than 100 accounts are there. Armenia, Australia, Bangladesh, Belarus, Belgium, Botswana, China, Egypt, Fiji, Germany, Guyana, Hong Kong, Indonesia, Israel, Japan, Kazakhstan, Kenya, Kyrgyzstan, Malaysia, Maldives, Mongolia, Mauritius, Myanmar, New Zealand, Oman, Qatar, Russia, Seychelles, Singapore, Sri Lanka, South Korea, Tanzania, UAE, Uganda, UK, and US. Now, why this is important for us? If I am raising an invoice in rupee on Nepal and getting money in rupee, I am still not eligible for incentives, etc. No drawback is there. If I raise an invoice in a country, if I raise an invoice, rupee invoice in a country where the money does not flow through SRVA, then also I do not get, because it could be a non-convertible rupee. But all these rupee accounts, SRV account, it's a convertible rupee, and as a special gesture, RBI has allowed in July 22 and in September 22, DGFT has also come up with a clarification saying that if you are selling goods to any of these countries, you raise an invoice in rupee, get the money through SRV, and you are eligible for all the incentives, drawbacks, etc., whatever the permissibility is there. So this is important. So those countries which are marked in maybe highlighted in yellow, these are the new additions in last 3 months. And Malaysia I have made in red because in the previous list I was able to see it, but in this list it is not there. So maybe the account is closed or some other issues are there. 35 countries. Monitoring of shipping bill. Now, monitoring of shipping bill by banks will be done through EDPMS. So, all our shipping bills through various ports, airports, land boundaries, ICDs, courier terminals, SEZ, etc., go through our EDI. They are all EDI. So, they will go through IceGate and ECCS. And for foreign post offices, currently it is non-EDI because it is under testing that how you will upload to through IceGate or ECCS. So the much data is not there. So it is a non-EDI port. Now all these can be monitored. So what onus is there? You have to submit the bill. You have to submit the declaration. For non-EDI, you have to submit the documents to the bank, and bank will upload in 5 days. On the receipt of money side, when the bank is receiving money in Nostro Vostro account, bank will ask you, what is this amount? And the exporter can say that this is related to export and bank can create an IRM. But your bank will not know if the money is received from Nepal or if the money is received from PayPal and it's directly credited through NEFT RTGS. Then there is a problem. So I have to go to the bank and tell them. So the bank where I have received my money or where I am maintaining the account in which the money has flown. So somebody who is maintaining account with bank A and bank B, some money is received in bank A, some money is received in bank B. Each individual bank will create an IRM. A bank will not create an IRM for money received in bank B, and B will not create an IRM or should not create an IRM for money received in bank A. So now the shipping bills and inward remittances will be monitored, including the MTT. So MTT is out of ADPMS currently till 30th of September. We are expecting that RBI will provide suitable window for MTT also. Because if I am not bringing goods into India and if I am not sending goods out of India, I may not have an IC also. Why should I have an IC? Okay, now suppose if I have an IC, then how it is to be monitored? Because I will not have a shipping bill, I will not have a bill of entry. So all this modalities and modifications in software is expected now. Where there is a cross holding, maybe shipping bill has AD code of bank A and payment is received in bank B and IRM is created by bank B. And I submit document to bank B, so bank B can pull that shipping bill from bank A, we call it AD transfer. And if I submit the document to bank A, then bank B has to release that payment, we call it EFI. So then that can close. Shipping bill and IRM, bank has to monitor submission of document, pending shipping bill IRM, and overdue. Overdue is what? Beyond 15 months, whether it is extended or not. If it is extended, then the due date gets extended. And in case of inward remittances, earlier 12 months, now 3 years, or as per contract, whichever is more, so 3 years is normal period. But one caution is there. Wherever people are receiving advance remittance for 3 years, whether that money is being used for export purpose or not, this is one question. And we had news, maybe newspaper items were there some time back where they said that people have received huge volumes for inward remittances, the money which has not been used for export purposes but has been diverted and investigations are. So my advice or my request to all of you, those who are on the call, is that you must counsel with your exporters to work within the compliance guidelines only. There are ample windows to bring in the money. Why use this window where there is a separate watch, separate people are watching? Then your non-receipt, short receipt, extension, everything will be done. Now, currently, what is the position? I have a shipping bill, I have a BRC, I have a IRM, bank has created it. I can go to DGFT side, map it, and generate a BRC. But simultaneously, I have to give the documents to the bank to close that entry EDP. So two actions are to be done by the exporter. There is also a provision for caution listing of exporters. If the shipping bill is pending for more than 2 years, AD can recommend to RBI for caution listing. And DOA reporting, Enforcement Directorate reporting is there. There is a silent saying that if you are not able to control the exporter, or if you are not able to make him submit the bills, or the exporter is not coming forward, not traceable, etc., you can always report the matter to Enforcement Directorate, let them investigate. Now, what does this say? 23R. 23R says that if the bill is not realized, the closure of the bill in ADPMS remains there, the generation of BRC with DGFT side remains there, but if it is not realized, then what will happen? If the export proceeds for an exporter remain unrealized for a period beyond 1 year from due date, so 15 months from, so either it maybe if the invoice is for 6 months, then I don't get 15 months. 6 months plus 1 year. But suppose from 6 months I have extended it to 12 months. then 12 months plus 12 months, extended due date, of realization or extended period, if any, allowed by the AD, the exporter shall undertake further exports only against receipt of full advance or an irrevocable LC. Now, this is where we are hit here. Our business gets hit. Exporter does not bother to extend the bill, and several of his bills are pending. Bank has been sending reminder. बोले कोई बात नहीं. I will, I will get payment in next 3 months, 6 months, whatever. What does it say? If those overdues go beyond 1 year from the due date, then further shipments will be stopped. There is an auto stop given in the EDPMS now. If you come and extend, I will extend the due date so that 1 year beyond due date is extended automatically. But if you do not extend the bill, then 1 year after due date, if the bill is not extended or payment is not received or exporter does not come and say what has happened to the shipment, then there is a stop there. It says further exports can only be made if you receive 100% advance or irrevocable. It is similar to caution listing. In caution listing also, currently, if an exporter is caution listed and you want to do further shipment, you have to take a certificate from the bank that for this shipment I have received advance payment, which has been paid. It's as good as an FIRC, which customs will ask for, or receipt of irrevocable. Certificate from the bank is required. Customs does not allow shipment for caution listed exporter. So while the caution listing, currently the regulation says AD may recommend and RBI may caution list. You get a Toko's notice and then a final notice under caution list. That paperwork has been eliminated. It has been made in hardcore. Full stop. If you do not extend the bill or if you do not go to the bank and tell them. There is no reference of DOE reporting as of now. But in all communications of RBI has made it amply clear that if you are not able to bring the exporter to your table, if he does not cooperate, if he is not traceable, you can always hand it over to the regulatory authority, which is enforcement. No measures of caution. Recent updates, the circular of 1st October I have already discussed, 10 lakhs per bill or bill of entry. It has been made there based on declaration. These entries can be reconciled, so bank will have to create an IRM. Even if the reduction is there, that can be closed on the basis of the reduction now includes write-off. For bulk exporters like e-commerce, etc., we have people who say that we ship more than 200 shipments a day and 100 shipments a day, etc. They will have more number of documents. So there they have said that this reconciliation process can be done maximum on a quarterly basis. So based on two excels, one for inwards and one for shipping bill, larger banks have their own standard formats for that. And you can submit sample documents and then get it closed. So quarterly basis, this can be done by them. But my suggestion always to exporters that if you have 100 shipments a day, why not submit documents every 7 days or 15 days? Why wait for a quarter? When you wait for a quarter, what will happen? Some of the documents will miss. Some entries will go here or there. Some malfunctioning could happen. Or your accountant could leave the job in 3 months. Then problem खड़ा हो जाता है. It's not there. The other major change which was brought in 1st October, which is also there in the new circular, new guidelines, is that for overdue bills, banks were charging overdue charges, 250 rupees per quarter per month. One of the foreign banks I have seen a notice which says 2,000 rupees per bill per month we will charge you. I still have that copy with me. Somebody who has done a shipment for $10,000, which is not paid by the buyer, I have not extended it. 2,000 rupees per month if I pay, then what do I leave with me? Or there are smaller ones, $2,000 only. Why 10,000? So now they very specifically said bank will review their charges for small value up to 10 lakh rupees. It should not be on the higher side. Also, there will be no penal interest for overdue. You may levy charges, bill handling charges. Instead of 500 rupees, you may charge 1,000 rupees, or you may charge 100, or you may charge 50, whatever it is. But if I don't want to handle small value, I may put a charge of 2,000 rupees per bill. But there are banks who are charging 50 rupees also. But here, no penal charges are. This is where it is clarified in the circular of 1st October, and it is also clarified in the guideline. Now let us talk. 10 minutes more I'll take, and we will talk on the bank's SOP and policy and how it impacts and what are the issues pending or what should be done now. In the bank's policy, bank will have to prescribe list of documents, timeline, charges for each process and approval. Everything has to be there in the bank's policy. Extension of time period for election, repatriation, that also has to be given, and import payments. Adjustment under over non-relation, excess relation, retention of money, advance against exports, advance for imports, internal approvals. Now matrix has to be there. Everything will not be available in the branch. Maybe you have to go to back office, seniors, regional office, journal office, etc. And guidelines relating to factoring of import and export. The responsibility for approving transactions is clearly delegated across internal levels. So level escalation matrix and level matrix will have to be there. Then escalation process has to be streamlined. Grievance, customer grievance and appeal mechanism has to be put in place. Ensure that the charges levied for handling transaction and associated process are reasonable and proportional to the services rendered. Shall not levy any charges for penalty on its constituents for any regulatory delay. So already those charges are there. Now, what thing it is covered is there. This policy and the related SOP should be publicized and be put on the bank's website. I have a challenge here. A large corporate will be dealing with 17 banks. Gone. We will see how. What could affect exporters under new regulations? Steps to be taken by exporters now, and how CVs get affected for non-compliance. Three things I have covered in one. Three regulations now left to banks' internal policy. Each bank will have their own policy, and policies may differ from one AD bank to another AD. And if your client is dealing with 4 banks, he may come up with 4 requisitions to you. That my bank A requires this document, bank B requires this document, bank C requires this document. So maybe your internal staff will have to know and they will have to find out what each bank, whenever you are putting an AD code of bank, you have to link it with the policy of that. Onus on banks for compliance or non-compliance policy likely to be more stringent. What we feel is that because the onus of compliance is there. Earlier, what was there? RBI ने कहा है. अभी there is no RBI ने कहा है. Banks policy will have to be there. So what I personally feel that it may be relaxed for the top class. Even now it is relaxed. If I have to send an advance remittance for $5 million, it is not allowed to all, but it is allowed to some. So for that, some policies may be relaxed, or even the bank's director or general manager or CGM or GM will approve it.
Yes, tell me.
But on the other side, for general masses, the policies are likely to be more stringent, so we'll have to look at from that point. Appropriate delegation within the bank. Now, when the delegation word is there, then everything will not be available or might not be available at the ground level. When it is not available to the ground level, the front officer will say, sir, I have to take an approval from zonal head, or I have to take an approval from product team or process team. More stringent due diligence requirement will be there. Sir, 4 कागज और दे दो. Branch में होगा तो 3 में होगा, otherwise 6 चाहिए. So time for approvals and due diligence. So things may get delayed maybe for inward remittances, for document lodgement, for dispatch of documents, for any other things. Import side more particular. Banks may ask for additional documents to ensure proper due diligence, enhanced due diligence, internal process, customer level and transaction level due diligence. Both things are to be done. So export made easy, but bank satisfaction is more important, becoming more important now. In case of multiple banking consortium bank, different policies and processes of different banks, so document requirements could be different for transaction level and due diligence level. So I spoke about some corporate banking with 17 banks. Each bank might have some small here or there. Even if we categorize large private sector banks, small private sector banks, old private sector banks, cooperative banks, public sector banks. Within the public sector also small and big. State bank is a different public sector altogether. Then you have 6-7 types of banks, and then foreign banks. older foreign banks, larger foreign banks, new foreign banks which have got only one branch here in India, or those foreign banks who are operating through some bank here in India. How do you do it? चैलेंज है बहुत बड़ा एक कॉर्पोरेट्स के लिए बहुत बड़ा चैलेंज है दे हैव टू प्रिपेयर देयर ओन टीम्स फॉर दैट and I am now working on how to take this to corporates. This is more important because the challenge will be by them. That one challenge will be to maybe make the internal policies available at the branch level, and the branch person should understand those internal policies. But the other thing is that when you talk to exporters, they must also understand what the bank is asking. Overdue bills and payments monitoring by exporters is required. If I do not extend it in time, that 12-month period or clock will start. So to avoid issues in further shipments. Now, from now till 30th September, what needs to be done? Check all pending items. Shipping bills not closed in EDPMS, IRM not closed in EDPMS, IRM not created for IRM payment, partial payment, short payment, non-payment, write-off, whatever it is. All banks present and past. What is this past, sir? Past is that if I was banking with bank A 10 years back, I am not looking at that bank now. उसका कुछ mail भी नहीं आता है. I don't pass through that lane also. I have shifted my office from, say, let us take an example from Fort Mumbai to Andheri now. If I take an example of Mumbai, I don't go to Fort now. Fort तो otherwise कौन जाता है? My all work is done in Andheri. My Andheri bank does it. Everything is changed. Now I don't look at that, so reminders also don't reach me. Address भी change हो गया. I have not gone and bothered to change that address. Account is also closed. But some entry is pending with that bank. That bank may report it to RBI, that may block it in EDPMS, that may create a problem for it. Even now they are creating. We have examples from customers where, sir, वे बैंक का खाता तो मैंने 12 साल पहले बंद कर दिया था. But they have reported to customs or they have reported to RBI for caution listing and we have received a show cause notice. Because I have not bothered. So I have to take a NOC for all the banks past and present. पिछले 20 साल में जो हो गया सबसे NOC चाहिए. How? Get pendency reports from bank and check RBI EDPMS portal. We have all past and present banks. I can visit them, ask them, sir, give me a printout of if I have got a pendency in my IDPMS in my account, and then take a printout and keep it with you, or take a NOC from there. If it is some pendency there, try to work out, take help, because पुराना जितना होगा उतना ही problem है solve करने के. And think of monitoring tools. Now onwards, how to do? From now, I have to think, because after 30th September, now larger corporates have seen. We handled a case for a corporate where some 3,000 bill of entries were pending. ऐसे इकट्ठा होता है मुझे भी समझ में नहीं आया. One company which is doing e-commerce had said, sir, 1,70,000 shipping bills are pending and bank is not doing it. अरे 1,70,000 इकट्ठा हो गया, nobody bothered. 1,70,000 cannot be in overnight. One client, we have resolved some issue in Jaipur, which has 27,000 shipping bills closed. It has taken us 4 years to close that. 27,000 shipping bills. It will be, jitna purana hoga, utna problem hoga. You'll have more issues if it is more old. And then we have to think of internal software or taking help of some ready-made software or ledgers or Excel sheets. Everything is possible. So sometimes we help out the corporates also in doing so. Now, what issues could be there? Shipping bill is pending with bank AD bank A, but my bill is pending with B. My payment was received in B. Or payment through PayPal, shipping bill is pending. I have not gone and given the documents to the bank. Shipping bill is pending, exports to Nepal, payment was received in rupee. I have not given the bill to the bank, IRM is not created. Shipping bill is pending, payment is received in INR, I do not know who will create an IRM. So what has happened? Payment received through PayPal, money handled in India by Citibank. Citibank paid to, say, let us for that example, Citibank paid to Kotak. Then the Kotak credited to the account, the shipment was made, the shipping bill, AD code was made as ICCA. The name of the banks only for the example purpose. Now 4 banks involved. And now I am not dealing with ICICI. I have gone to State Bank or I have gone to HDFC or Axis. 4-5 bank हो गए. Who will create? इसी में प्रॉब्लम सॉल्व करना पड़ेगा. So you'll have to find out who will create it. Then payment not received partially. How I have to close it under 25% window, full write-off window. I should do it now before 30th September. Close. Sab khatra. Everything has to be closed. Payment not received, buyer not traceable, not contactable. How can I close it? How can I, whether I have to write off, whether I have to follow it. Bada amount as you cannot write off like that only. You have to do a follow-up. You have to do maybe due diligence, contacting embassy, writing to DGFT, filing FIR, filing legal suit, etc. Shipment made to Nepal, payment received, SB not appearing in EDPMS. Now, these are certain old cases where EDPMS bills are not there. Bill of entry also similar cases are there. So we'll have to find out. You have to go back to customs and get this done. Shipment made in 25, payment not received, what to do? Now, in 25, say maybe September 25, somebody has made a shipment of $10,000. I cannot go and close it now. I have to wait for 1 year at least as per current guidelines. And also, if somebody wants to write off $10,000, it is directly eating their profit loss. So you have to see how, whether and how this is to be written off. So write-off is another process and headache now. Relating to payment, payment received as advance, bill has been lodged, but both the entries are pending. Bank has not closed that. Payment received, shipment not made. Whether can I make shipment now or I have to refund? Want to refund? So I can make a shipment now. If it is not made beyond 12 months, beyond 36 months, whatever bills are there, I can talk to bank and make it. Advance against export, shipment not made, want to refund. Now, as per current guideline, if it is beyond 12 months, I have to go to RBI. Subsequently, bank will dictate this. Bank may allow, bank may not allow. Shipment not made, amount not to be refunded. If it is not to be refunded, as per current guidelines, you have to go to RBI. After 1st October, bank will decide. Sample exports, payment received. Either no shipping bill filed or CSB 4 filed, which is for non-commercial. Now entry is pending. I have to get the purpose code change. Payment received in INR, AD and pending with AD and no shipment made. So now this is how to be controlled. Now my view is that when technology is taking place, even all our export related payments from PayPal, Payoneer or those agencies will come under the system automatically in some time. Maybe एक साल इसको जाने दीजिए उसके बाद नया कुछ change आ जाएगा. How we get affected? Large exporters with multiple banks, correct choice of AD code. If you put some A or B AD code, then that AD transfer, pull and push has to be done. So to avoid that, correct choice of AD code has to be done. So people are maybe unit wise, factory wise, location wise, different AD codes, different banking arrangements are there that we need to understand. Large exporters dealing with multiple banks, individual AD bank policies will have to be understood after 1st of October. Because the documentary requirement will be there. So your customer can come to you say, sir, this bill is to go to State Bank or this bill has to go to public sector. वहाँ पे 4 कागज जल्दी चाहिए. This bill has to go to some private sector bank. वहाँ दूसरे 4 कागज चाहिए. Timely relation or extension, if not done, may lead to blockage of further shipment. If your customer is not caring to extend the non-relation of a bill, and because of that, that auto shut beyond 12 months is put in place, then further shipments will not be allowed. If further shipment is not allowed, then what we will do? It will affect our business. Once you get it rectified or done the extension, then the handling time, delays, etc. will creep in. Because then what will happen? Then somebody will tell you you cannot do a shipment. Then you'll have to go to bank for extension. Bank will take 1 week to extend. 1 week तक आप cargo लेके बैठे हैं, आप you cannot put it. Your customs will not accept that cargo. You cannot file that. Default by exporters, non-closure of bills in ATPs by banks and non-generation of BRC, both the places. On one place, RBI is monitoring, on another place, DGFT is monitoring. And we have seen DGFT issuing notices for drawback refund. 2014 to 18 were reconciled in one go, and in 2021, notices were issued. Some 45,000 notices. So you never know when this will come up, and then customer does not do anything, sir. He'll come up to you, sir, मेरे को इसका reconciliation बनवा दो, इसकी data निकलवा दीजिए. All those things will come up on CBCHS or freight forwarders only. Now, this is one tool where till yesterday's meeting with one of the PO chapters I had, there were people who said, sir, we do not have access of EDPMS, IDPMS from RBI. I will urge all the people here, some 70 plus are there, all the people here to take this to your exporter importer clients and get an access to the portal from RBI. What is this? EDPMS portal is there on RBI where an exporter has to or importer can make a login registration there by putting certain items. Your login item is there. You have to put in the same email ID and same phone number which has been registered with the bank. And through that, password change and verification happens. OTP. You can get the each shipping bill and payment details individually, or you can search for all the details and download the reports. So sometimes people come and say, sir, our bank does not provide the reports regularly. You go and download yourself. Why do you want to take support from your bank? You can, and if you download IC wise, you will get all the reports from different banks. But if you go to one bank, if you are dealing with five banks, you have to go to five banks to get the report. This is just a screenshot. So every exporter importer must create a login and monitor pendency yourself. Maybe you can help the exporters in creating this. So this is all from my side. Thank you very much. Urge all to help in doing business with compliance, and then export is required. Your support is required to increase export because this logistics now, as we started from the first address by Shinde sir and Amit sir, logistics is the need of the hour, and that is one thing which is going to help us to increase exports, which is the need of the hour for the country. Thank you very much. If I will also put my details in the chat, they will be available with the association also. If anybody has any further queries, I will take the queries now. But any further queries subsequent to this, your client needs any help in closure of bills, in any of their regulatory requirements related to RBI, you can always give my reference, give my number, ask them to WhatsApp, send me a mail. I'll be always be available. Thank you. Thank you very much.
So thank you, Gaurangji. I mean, first of all, any understanding any RBI circular itself is very difficult. Now you have really made that what was earlier, what is new, what needs to be done, what exporter should do, how the forwarders and custom broker can guide their exporter. I think this is a great, this thing, really insight, and the efforts to make it this complex topic into really old one and new one. It is a great. So I have a Tej contractor here, the president of IIFF. I request him to. I see many questions, but let's see how many questions we are able to take. So over to you, Tej.
Thank you very much, Sansar. Gaurang bhai, awesome presentation, very insightful, and I think it is an eye opener for all of us on the kind of new practices which are coming in.
Your voice is not clear, sir.
Is it better now?
Yeah.
Yes, sir. Better.
Better.
Okay. So we have a first issue, first question which is raised by Mr. Krishnan. In case of any correction that happens to take place arising out of a mistake in filing a shipping bill, currently the customs is issuing a space saving certificate, and thereafter this creates issues. How does one address that kind of issue?
Sir, I was not able to get your question. You are reading from chat or Q&A, sir. I'll take from there.
It is from the Q&A.
It is from Q&A. Just 1 second.
The first question by Krishnan N.
Yes, sir. In case of any corrections mistake happening while filing the shipping bill presently, customs issue a certificate and systems never get updated. This causes confusion and delay in finalizing the corrections. So, sir, once the current policy, I'll answer this. The current policy is that once the shipping bill or bill of entry is uploaded in IDPMS or EDPMS, then customs does not have any control over that. So to the bank, all those wrong errors will go there. So on the basis of the manual corrections made by the customs or a certificate issued by them, we have to go to the bank, and according to the new maybe the corrected version, bank has to close those entries in the system. So in EDPMS, IDPMS, bank does not have a control. While as in the ICE gate, maybe that there is a place for maybe showing that what corrections have been made.
All right. Thank you very much. The second question comes from Mr. Pritam. At present, we have been mentioning FEMA declaration in marks and numbers. This, it is understood the new FEMA declaration is considerably lengthy and it would not fit in any field. How would we file the declaration today? Would it be filed as a separate input in the shipping bill, or do we fill up a form and upload it on e-Sanchit, or what shall we do?
Sir, I think the shipping bill by itself format will have this. This should have an auto printed or auto space there where this has to be mandatory that this declaration is already there. So that is what we presume, that if there is a change in the nomenclature, either they will have to provide more space there, so to copy paste from somewhere else, or it has to be a maybe what you call auto populated thing, that this declaration is auto printed there. So that is what I feel there. So we can again cross check where this is to be done.
Thank you, sir. So most of the questions in the Q&A have been answered, but so this is a very, very apt question which has been raised. Invariably, the soft target is always the one that's, the easiest to hit. And invariably, you are addressing the soft audience at this moment. So, a question raised, what would be the provisions, okay, where custom brokers would be held liable on the failure of that failure on part of the clients? So it's a tough question to answer, Gaurang bhai. But
tough question, sir. But I will give my view. Till there is no error, no wrong declaration, no malafides available, I don't think anybody else is responsible except the exporter. If there are malafides, wrongdoing, then everybody is responsible under any law. Here also, this would prevail if there is a non-relation or a misdeclaration till the CHA CBCA has declared it on the basis of the documents given by the exporter, and then something goes wrong, then still we are safe. Exporter is only responsible. So we need not worry till we are clear in our conscience or in our work. And I understand maybe many of us or large number of us would have their own checklists or own declaration forms, how the exporter nominates us to handle this work. All those things are in place. So we are what? We are only supporting service. We are not handling the cargo. We are not the shipping company. We are the supporting services what we are providing to an exporter. So the onus of maybe that non-shipment blacklisting will not anytime come. This may happen that if there are certain fraud related cases, then we may be asked to collaborate, or maybe the government or any agency we can come to our doors and ask us, sir, you give the what documents you have taken from the exporter, what exporter declared to you. Not beyond that. Not beyond.
Thank you, Gaurang bhai. Excellent, excellent reply. You have just said that we are intermediaries and we should never be held liable. Okay, so it's a big plus. One question which is there, which is I think very relevant. One shipment was booked through an NVOCC. Now that was unknowingly loaded on an Iran flag vessel. And because the bank traced it, they found out that it was loaded. Now the bank refuses to negotiate the documents. What recourse does a logistician have in this case?
So this back and sanction is the problem with the financial institutions, banks. Because banks have got accounts in USA, or they have branches there, or they have their listings there. Because of that, they have to abide by what US says. We have a US Patriot Act. Because of that, we are bound by that as a bank. So bank may refuse. The government does not say you cannot ship on Iranian ship or to Iran or to any sanctioned country or sanction. We do not. Government of India does not recognize. So as far as if the shipment has gone there, bank may only not negotiate or handle the document. Let it be there. पड़ा रहेगा कोई प्रॉब्लम नहीं है. Other thing, if I have received a payment from say maybe Dubai and the shipment has gone to Iran, both the entries will be there in DGFT. We can always close that and get a BRC. So in maybe suppose older cases BRC is not available, we have the submit a copy of the document to the bank. Let the bank give in writing because of this issue we are not handling it. आप वो कागज रख के keep it in safe custody. Even after 10 years, somebody knocks our door, we can always say, sir, we have received the payment, we have done the shipment, government has not prohibited, only bank is not handling, it is not our fault. So somebody had come to me 3 years back saying, sir, I have a almost $100 million worth of, sorry, 100 crore worth of business in Iran, but मेरा बैंक मना करता है. So my simple response was that आप business करते हो, आप business करो, document का बाद में देखेंगे. Document close नहीं होगा उसकी मतलब the exporter should not worry that the documents are not getting closed as far as we are getting the money. We don't get the money. The better way is you check with UCO Bank now whether that commodity is permitted, whether that buyer is permitted there or the supplier is permitted there. UCO Bank will handle all types of documents relating to Iran. Only you have to open a new account there, take their concurrence on the commodity, etc. Once they get an approval from Iranian counterpart, this is possible.
Thank you, thank you. Lovely, lovely response. I just wish that our customers would understand in leaving documents open. You know, it is. So we get squashed. We are like the sandwich in the middle.
Mm-hmm.
But so we are like the cheese in the sandwich. I'm sure I've made a few people hungry already. Going further, there is a really interesting question that's asked, and then I have a few more questions to ask you. So let's assume that the exporter or the bank fails to generate the EBRC. It has been generated after 1 year. Okay. Since it has been generated after 1 year, should the drawback or the incentives be returned?
Actually, not my forte. But what I understand is that if the payment is realized within the timeline given, currently 15 months, prior to that 9 months, if the payment is received and you have generated the BRC after that time, then there should be no problem. We can always go and extend to the government. But if the date of payment is beyond 9 months or 15 months, then there is a challenge. Maybe if it is not extended or not permitted by RBI. If it is extended, then also this should be permitted. But not my area of operations, so maybe not very clear on the on what DGFT says or what customs says about refund of drawback.
No problem, sir. So coming to two very interesting problems, and that's what we face as logisticians. The first problem, which is already been set and clear, the biggest issue that we have, especially when we are dealing in freight, is we accept money in US dollars and we pay money to a line in US dollars. Now, the earlier circular was quite clear. It was settled that export freight is permitted. As you have mentioned, the earlier circular was restricted to export. The current one covers imports as well as merchanting trade. Can we accept payments in US dollars for import as well as merchanting trade?
Sir, payment of freight or receipt of freight is not covered under the guidelines related to export and import. It is covered under the guidelines of other remittances.
Mm-hmm.
And other remittances guidelines as of now have not been changed.
Okay.
So the status quo remains there.
Status quo remains.
But going forward, once these guidelines are in place, maybe RBI will and should consider that wherever these bottlenecks are there, payment for imports and payment for export differentials that can be taken out.
Understood. Coming to, I think, the last question, which is very relevant for all of us again as logisticians. We have multimodal corridors which are there, which are very popular now. The INSTC has been one very, predominant corridor. Triple FAI has been a very big part of that. If I have goods going into Uzbekistan, Tajikistan, etc., they go via Iran, or they have traditionally moved via Iran. The moment the bank sees Bandar Abbas, they raise their hands. What do we do in a situation like that? Appreciate your insights.
Leaving aside the current scenario, in a normalized condition, the only issue would be that if the Bandar Abbas port is touched, then bank may not handle the documents except for UCO Bank. Uh, we find certain challenges in Russian shipments also, where certain sanctioned banks are involved or sanctioned people are involved. There also we have to take care similarly. But my view again here will be that if it is touching that port or there is a transshipment happening at that port because of the further goods going by rail or road, then there should be no issue in doing business except for how do you handle it with the banks. And OFAC still will remain that problem till US removes that OFAC condition. Maybe once we are through this war, those conditions should have been removed. That is what we expect now. So maybe whenever these issues are settled between the Middle East and the USA, then these things may not be there at all, and everything would be free, except if they get the charge of that port or that area, etc.
Okay. Thank you, Gaurang bhai. It was really, amazing to hear you address and take all the questions. I hand it over now back to Sansar to continue with the proceedings.
Yeah. So thank you, Tej, for handling this and great, I mean, very well settled questions of difficult questions. We have Dr. Neerav Thakkar here, the honorary treasurer. I request Dr. Neerav to give a formal vote of thanks and conclude the session.
Thanks a lot, Dr. Sant. What a wonderful session. So, good evening to everyone. It's my proud privilege to propose the vote of thanks for today's insightful session on the changes in the RBI regulations and their impact on the exporters under the aegis of organized under the aegis of Triple FAI. At the outset, I extend deepest gratitude to our keynote speaker, Mr. Gaurang Vasavana, who's an exceptional speaker and master on this subject. Sir, your lucid explanation of the evolving RBI regulations, their practical implications for exporters once implemented, has been enlightening and immensely valuable. You have simplified the complex regulatory frameworks into a wonderful presentation, giving actionable insights, and this is definitely going to benefit our trade and fraternity. I would like to express my sincere thanks to our chairman, Mr. Amit Kamath, for his visionary leadership and the constant encouragement in organizing such knowledge-driven initiatives. It's a heartfelt. I also a heartfelt appreciation to the immediate past chairman, advisor Mr. Shankar Shinde, as well as Mr. Mark Fernandez, office bearers Mr. S. Anil Kumar, Mr. Rajesh Sharma, who are part of the panel, for enlightening us with your knowledge, and appreciate the efforts of the entire office bearers, advisors, and executive committee members who have joined this important webinar from across the country. A special thanks to our Honorary Secretary, Mr. Sudeep Dev, for overseeing this session and ensuring a seamless coordination, although he is traveling. And I acknowledge the dedicated efforts of Women's Wing headed by Ms. Chaitali Mehta for widespread broadcast of this session, along with the Secretariat team. Because of their behind the scenes work, this event has been smooth and successful. We are equally grateful to Dr. Pramod Sant, Director General of Triple FAI, for his unwavering support and strategic direction, as well as very well moderating today's session. Under the guidance of Office Bearer in Charge, Mr. Sudhir Agarwal, I thank President of IIFF, Mr. Tej Contractor, for his presence and encouragement, and which always has added immense value to such forums through his skill and wonderfully addressing the questions of the participants. Finally, to all our members, participants, attendees, your active engagement and thoughtful questions and keen interest are truly have truly enriched today's session, and your presence reflects the importance of staying updated in this ever evolving regulatory environment. So, as we conclude, we are not taking back just knowledge, but clarity, confidence to navigate the changing landscape of the trade regulations. So, thank you once again, everyone, for being part of this meaningful sessions. Have a great day and a wonderful weekend ahead. Thank you.
Thank
Thank you,
you.
sir.
Thank you.
Thank you all.
Thank you.
Bye, everybody. Thank
Thank
you.
you, sir.
Thank you, sir.
Thank you. Bye.
Bye.